Good afternoon, all. Welcome today, everyone, and thank you for joining us today for this session on annual return filing for the financial year 24-25. This year, annual GST return cycle is quite significant for us all. Reason being that there's been many changes that have been introduced by the GST authority with respect to revised formats or the auto population that has gone deeper right from our 2Bs to more stringent GST and validations. We are looking at a new phase of annual return filing cycle this time. And obviously, with that comes the preparedness that needs to be even more stricter from the tax teams this year. We have a few changes that have come with the reconciliations, mismatches, also the GST wise reporting that needs to be catered to. The GST ITC reversals are another game changer, wherein the Rule 42 and 43, which were previously catered differently, have come up with changes again. Previously, the ITC adjustments and RCM compliances were handled separately. But now, as we look at the different tables of our GST R-9 return filing, we see that new additions have come up for the tax heads, and obviously with that, a lot of challenges are being faced. To cater to that only, this session today is being run by our CA Kanika Malhotra, who will be taking you along the journey of the new changes and how to deal with them for your annual returns filing cycle for 24-25. Without further ado, I would like to hand over the platform to Kanika, who would be taking up the session. But before that, I'll just quickly run you through the things that we'll be taking up today, wherein, first of all, the key issues and the concerns that the industries are facing would be taken up by us. After that, the important changes and the compliance updates with respect to your tables and any other amendments that are to be taken up by you would also be addressed. We'll also be giving you a practical knowledge on how to avoid departmental notices and any kind of audit objections. With respect to your GSTR 9 and 9C filing process, our expert would also be helping you set up a step-by-step approach that can help your filing process and make it more easy and streamlined. Along with that, we'll also be working on a few essential workings and reconciliations that your annual return filing and audit ready preparedness must have, and that will really help your case in the upcoming month with respect to how what kind of reconciliations are the most important for you this time. And uh, after that, the session would be open for a question and answer round, wherein you can ask whatever challenges that you've been facing till date. So that's all right now. Without further ado, I would like to hand over the platform to Kanika. Thank you.
Well said, Trishti. First of all, thank you all for joining the webinar on GSTR 9. And today we're going to have a walk through that what all changes that have been come up in this financial year filing, basically 24-25, and secondly that how the things will going to run through, and thirdly that what all the issues that are still have a challenge on the industry, what all are the changes that have come up in the GSTR 9, and how you can cater them with a better understanding that though these changes look very minimal by just insertion of the rows and some textual changes, but they have a major impact on your filing status. As far as you know that government is introducing day by day lot of structural changes. So just from the initiation you create the invoice till the time of filing of your 3B, everything is being routed towards your through a very structured change. Like you create the invoice on the portal, e-invoice on the portal, the same reflects in the GSTR1, and then you click on the IMS. You have the options to accept and reject, just to take all the ITCs on your own, and you just reflect it in 3B. So how the things have changed, automated by the government day by day, so the impact is being taken in the GSTR9 as well. So, first of all, I'll just give you a little glimpse like who all are eligible to file GSTR 9. It is like the if an organization who has an aggregate annual turnover of the preceding financial year is of more than 2 crores, they are eligible to file mandatorily the annual return GST 9. Eligible is like you can file it on your own voluntary as well, but yes, it's a mandatory condition that you need to file it. For the GST 9C, this limit has been increased towards 5 crores, and those they need to get their audit done. They need to file their reconciliation statements with the returns they have uploaded on the portal, and with all the books they have uh, you know um, updated with regards to these returns and the information they have updated on the portals. And also this time, you as you already know that in the last financial year from July onwards, GSTR 1A has already been introduced. So the impact of GSTR 1A will also be taken care of in this return. So moving on, first of all, we'll talk about the challenges, right? That what all challenges were faced till today, and how few have been streamlined, how few, with all the automations that have been done till today, how these things have been removed. So in that way, things are being taken care of. So first of all, the basic major issue is the mismatch thing, that your books show some other ITC and your GSTR 2B reflects some other ITCs. So first of all, these differences due to some timing differences, as you all know, that vendors have not uploaded their invoices in their returns, and the same is not being reflected in your IMS and then being carried forward to your 2B. Another challenge here is like what all major reasons of mismatch nowadays after the introduction of IMS is like you have availed the ITC, you have reversed the ITC because, as you all know, the circular that was passed in 2017. Now this has been streamlined that all the inputs need to be taken the basis that is a uniform base of GSTR 2B. So if in the 2B you have some credit, but still it is not there in your books by the reason of you have not received the goods, so you cannot record it. You have not received the invoices, you cannot record it, or the supplier has not made the payment. All the 16 subsection 2 conditions need to be fulfilled to claim that ITC. So just for the case of 2B, you need to file that return, you need to reverse it because it is not reflecting. And after once the returns are filed, people just forget to update their books that this has been a challenge, this needs to be recorded further on. And when the year passes on, and at the end when you need to file the returns for the annual ones, you just need to have a run through that what all things have been leftovers that still needed to be included. Another, I think, mismatch that you find is between the GSTR 1 and 3B, because what all outward supplies you are mentioning in 1, the same reflects in your 3B. So here I'll just give a quick short example. Like nowadays, if any supplier has rejected a credit note, the same will your liability will not be reduced. The recipient's liability will not be reduced in GSTR 3B, and similarly, this will be a variation in 1 and 3B for this month till the time he'll going to accept it, or you need to amend or file the inflate with the inflated taxes. Another issue that concerns is the reconciliations, because I think reconciliations is a very big, big task that needed to be done, and you need to churn all your records, not only the books, not only the returns, and each gap in all your GSTs that you're maintaining for your organization. You need to go through each and every difference, explaining the reasons, what are viable and what are impacting your books and the returns. We're going to talk about this in detail at the end, that and incorporate it, that how you need to channelize it, how what all reconciliation should work upon beforehand only, so that it should not be a chaos at the end. Another is like that table 8 differences. I think this is a very common thing, and this is, I think, the most pain prone area of your GSTR 9 filing, because what all ITC that you have taken for the previous financial years, what all ITCs that you're passing on for the next financial years, all needs to be aligned, all needs to be maintained in this chart, and all the reconciliations needed to be done very well. But I think just moving on with the changes that has been done in table 8 as well, this problem has been met a little, and with the clarifications I'll be going to discuss with you today, one and on, with all these tables, these could be done. Another challenge that people find in the filing process of the GST 9 is identification of the RCM, because RCM liabilities need to be identified, which we are liable to pay the taxes, and the same should be included, because this certainly all these things impact the reversals also, if you have both taxable and the exempted supplies, or if you have the capital goods as well. So all these things needed to be keep in mind while working on these workings of the GSTR 9. Similarly, sometimes some things have been met, and as the things have been automated, these are not really that critical areas if we align our workings within the time scenarios. So moving on to the another slide, this way it will be telling you that what all changes have been made. Here it is in the table 6, table 4, table 5. Table 4 and 5 are basically related to the outward supplies. Table 4 basically has those outward supplies that have the implication of tax liabilities. Table 5 similarly are the outward supplies but not having the tax implications. Table 6 and 7 talks about the ITCs and the reversal of ITCs. Table 8 talks about the reconciliations. Table 9 talk about the basically the taxes paid. And now I will give you a scenario of, I will work upon the table wise thing. As you can look upon this table 4, this is basically the all the details with related to your all the outward supplies. Here a very minor change has happened, and that too in the if you see the row number G1, 4G1, it is supplies on which e-commerce operator is required to pay tax as per section 95, because as you can clearly see that e-commerce operator, as you can clearly see that here all the supplies that have been made under section 95, like I'll give you a short example to have a better clarity and understanding. It is like if an organization works through an ECO like a restaurant service, cab services, in this case Swiggy and Zomato, what they are doing, they are giving they are paying taxes on our behalf. I guess somebody's asking to share the presentation. This is one of the part of the presentation. We are discussing the changes that have happened in GSTR 9 table wise. It is like in this table, all the e-commerce operators, whatever taxable supplies they are making towards the restaurant services or the cab operators or etc., they're going to record these services here. Now in the table 5, you can see similarly, if you talk about that restaurant service, because that is an exempted supply for that restaurant, because e-commerce operators are already paying taxes on your behalf. So here in C1, those such supplies that are encountered under section 9(5) will be reported by the suppliers here. So these are the minimal changes that are being done by you and your e-commerce operators basically to be reported here. Now comes a major, I think, area of discussion, that where all the changes will be discussed here. Here, first of all, this is table 6, and table 6 have the major changes here. First of all, this 6A1 has been inserted. If we talk about 6A, I think this basically contains all the ITC that is already there in GSTR 3B of table 4A. So all the ITCs that we have availed will be reflected here for the financial year. But because that ITC could be of previous year and for this year as well, So here we need some reforms to be done by the government. That is why 6A1A1 has been introduced, and this has been done that if any ITC of any preceding financial year availed in the financial year which is included in 6A above other than reclaim will be included here. It simply says that any ITC basically that belongs to financial year 23-24, and other than reclaim is like you have not recorded and reversed in the previous financial year and you are directly claiming in this financial year. It is appearing in your GSTR to be for this financial year, so you need to mention it here. So that's why, and the net ITC, that is 6A minus A1, what it will be reflecting? It is only reflecting the ITC for financial year 24-25. Similarly, in 6B, all the ITC with related to 6B, 6C, 6D will implicate a bifurcation into the input capital goods and input services. You need to bifurcate all those inward supplies or the purchases that you have made in these columns, respective columns for this financial year. So here is now moving on to the another slide. Here it is a totality. There's another change in the 6M. 6M basically is the ITC availed. ITC 0, 1, 2 and 2A. You must be aware of this also, but I'll also give you a glimpse of it. ITC 01 is basically availed through if you are changing from the composition to normal, normal to composition, or in a merger and acquisitions, if you are doing all those things. So these ITCs are given here. I just needed to add one more thing. We're going to, after these tables, we're going to discuss with all the examples, like for the 6A1, all the scenarios that could impact your GSTR 9 and which you might feel a little confused that what year claims or ITC needs to be treated how and in which separate rows or columns it should be reflected without having any kind of creating any differences, and ultimately reaching to the destination where government wants you to take an impact of. So just having a here in table number 7, these are the reversal tables. So government is strictly have bifurcated them into rule 37 and 37A. Basically rule 37 talks about that these are the reversals on the point that where you have these are the reversals that you need to make if any tax for the 37 and 37A, that if any payments have not been done by the suppliers or you have not received the goods or services or any taxable supplies. So these talks about that. These rules talks about table 7. So, moving on before discussing these scenarios, which will give you a good clarity. So, if anybody has any question, we are good to go to take it.
If you have any questions till now with respect to your concerns, you can ask us over the chat, or if you want to speak, we can even unmute you. Please do let us know. You can raise your hands to let us know. So there is a question, Kanaka, from Sindhura. She's asking what to report in table 6H.
Sindhura, basically table 6H contains all those values like if any claim, if any ITC belongs, you have reclaimed and you have not reversed in the previous years and it belongs to this financial year, like for the cases of 37 and 37A, like where the supplier has not made the payment, payment has not been made to the suppliers within 180 days, and in the 37A where tax has not been deposited by the supplier in through their returns. So in that cases, when you are going to reverse in the similar financial year, like suppose in 2023 and 24 you have reversed those ITCs and you're again reclaiming it in the 24-25 when the same has been made paid by the assessee or the taxpayer. So now this becomes a fresh, ITC, because the time could not be assessed in such kind of cases. And government have also given such relaxations that as and when you report all these ITCs, it will be treated for this scenario only for this financial year. So 6H will include these types of reclaim amounts that you have taken in this particular financial year.
In the meantime, we'll take a question from Akash Saxena. Akash, I have asked you, I've given you the permission to speak. Please carry on with your question. Bilal is asking that what is 37A?
37A is basically a reversal where the supplier has not deposited the tax. He has collected from you, you have paid him, you have purchased something from the supplier A, any goods or articles. You have made the payment of the invoice, included the tax, but now it is a responsibility of the supplier X to make the payment it to the government by filing the return like GSTR 1. So as in soon it will going to pay, it will going to reflect in your GSTR 2B or IMS similarly. So this is basically a reversal where such payments are not being deposited to the government by the suppliers. You are not entitled to claim the ITC. So shall we proceed further just to understand the scenarios, because major questions would be settled down with all these scenarios that we're going to take up right now.
Anirudh is asking us for details with respect to table 12 and 13.
Sure, Anirudh, we're going to take this up in the later sections of this webinar. Don't worry about it. We'll discuss in detail.
So basically, for now, let's first go ahead with the scenarios. Post that, we'll take up the questions because some of them would by default be covered in that.
So, first of all, there are three scenarios that are going to affect through the table 6. First scenario is like you have the ITC of 2024-25. You have claimed and reversed it in 24-25 only. Uh, and reclaimed also in 24-25, right? So in this case, like it is given also that taxpayer claimed rupees 1000 IGST in April 2024 and reversed in October due to non-payment in 180 days, that is, and reclaimed in March 2025. So the whole cycle of claim, reverse, and reclaim is happening in the similar pattern, which might be one of the cases that fall for you also. So while we are originally claiming it, that now the section comes that how we're going to claim it. The original claim that you are claiming is through the 6B. You will going to show it in that only, because these would be the claim that you already made in your returns, and you will going and it belongs to the this particular financial year only, so in 6B. Now as you have already seen the table 7, you will going to reverse it through rule number 37, table 7A. Now you have claimed and reversed. So now you again need to reclaim it, as I've already explained earlier also. Now the relevance of table 6H. So as you have as it is a rule 37-37A for this financial year also, and this particular reclaiming belongs to this particular financial year 24-25. So it will be reclaimed through table 6H.
Kanika, just sorry to cut you in the middle. Bilal is saying that he needs an explanation on table 7 again.
Okay, Bilal, have noted down your query. At the end, we'll have a Q&A sessions. If you need anything to understand, we're going to deal it there only. So let's not break the flow of the other people interest also. Let's continue with that, and we can take in care. We can take care of it at the end. So now moving on to the another scenario, that like if you have not received the goods as per the circular, so taxpayer have claimed in April 2024, reverse in 2024, and reclaimed in May 24. So now the year has changed. So you have claimed and reversed in April 2024, and you have reclaimed in uh, May 2024. So similarly, now this has been a shift of the ITC reversal, because it does not belong to your 37 and 37A. So you can report it in the other sections of the table 7, that is the reversal table. So original claim, as likely said earlier also, 6B, the reversals would be made in 7H, and you can reclaim it because it belonged to that same financial year. You can reclaim it table 6H. So the first scenario has been completed. Now we are moving to the different scenario. The second scenario is like where the ITC belongs to financial year 23-24. It was claimed and reversed in 23-24 only, not basis of the rule 37 and 37A. Neither your payment was delayed, neither the taxpayer supplier has not deposited the tax. This might be some other reason of your reversals. And again, you are reclaiming in it 24 and 25, right? But before 30th November 2025. Here, what will happen in the GSTR 9? Now, this is the ITC. Now, moving on to the table 6 again. So if you could see, it is written ITC of any preceding financial year availed in the financial year other than reclaim. So it is the ITC of 2023-24 that you have availed in the financial year. In the financial year means like if the timeline has been given by the government also to claim it by 30th November. So such kind of cases will fall here. So you will going to reduce that amount of that ITC in 24-25 here, and you will going to show the net ITC for this current financial year. I hope everyone is clarified. Okay, so similarly, it has been showed here that in it will be reflected in 6A1 and not in table 6H. All right. So the another scenario is when we are considering for rule 37 and 37A cases with the similar example, it will be reflected in 6H, not 6A1, because it will be treated the ITC for this particular year only. Okay. Now, we have taken another scenario where ITC is of financial year 24-25. You have claimed and reversed in financial year 24-25 itself, but reclaimed in 25-26 by 30th November, right? So, how it will be reported in GSTR 9? As taking it is not a case of 37 and 37A reversals. So original claim definitely in 6B, reversals in 6H. Now we do not need to report in table 8C because this has already changed, because as you have understand that tables 8C, if we come up on to the table 8C, as you can see, table 8C talks about the inward supplies other than imports and inward supplies liable to reverse charge, but include services received from SEZs received during the financial year but availed in the next financial year up to specified period. This basically is the section where you need to report that if for the 24-25 you have not been able to take some ITCs and you will going to take it in the next financial year, that is up to 30th November, right? So basically, in such cases, what happens, it includes only two types of ITCs. I'm just giving you a glimpse here only because you need to reconnect it with the example in a better way. So basically, it contains those ITCs that have not been reclaimed at all. You have missed those ITCs that you're claiming it here in the financial year 24-25. Other ITCs would be another case here, here would be like if any supplier has forgot to upload his invoice in the GSTR 1 and the same is not being reflected in your 2B. So what you will going to do? So and if you're going to remind him, and in that meantime the financial year has passed and you have come upon to 25-26. Now again, if he files before 30th November, now this type of ITC that is appearing in your 2B of 25-26 will be shown here. All right. So this is basically a glimpse of 8C to have a better understanding. Now we are moving ahead, moving again into that example. So, original claim in the same examples, if the original claim would be in 6B only because it relates to 24-25, reversals in 7H because it is other than 37-37A reversals, and you can reclaim it at table 13 because table 13 shows you, I'll just give you an understanding here only. Table 13 gives you the, you need to reflect those ITCs that are belonging to this financial year, but you're claiming in the subsequent financial year. That is 24-25 ITC, you will going to claim in 25-26 up to the specified period. And in the next financial year, I'm giving you a linkage here only that what you will going to report in 25-26 of all these ITCs, you will going to show this amount of reclaimed ITC in table 6A1 because this is the case. it belongs to that ITC that you needed to claim it for 24-25, but you're claiming in this financial year. So this whole scenarios will, I think, will chalk out all the explanations and confusions, like that how we're going to deal in 24-25, and how we're going to take any implications that you need to take in the 25-26 GST R-9. So you can take a screenshot also of this so that you can have a better understanding how you need to relate it. Now, moving on to the next example. So, in this case, ITC is of 24-25, claimed and reversed in financial year 24-25 due to 180 days and non-payment situations. And again, you are reclaiming it in 25-26. So, originally, it will be claimed in 6B only because it belongs to that particular year only. Reversals would be for in 7A and 7A1 because now governments also need, in-depth quantum or segregation of transactions, that even if reversals are made under 37, it is a broad category now, so you need to identify and report them independently under 7A and 7A1. And we do not need to reclaim it in table 8C because it is not that case that you have missed that ITC that we have earlier, or your supplier has not given you or uploaded the invoice, and neither you are going to show this in table 13 also. The reason why I'm taking this, because table 13 also only takes such ITCs that you have forgot to take in this financial year other than reclaim, and you are taking it into the subsequent financial year in that limited period. So in 25-26 also, how you will going to implicate? It will be taken in table 6H, because in such cases in the reclaim also that I've explained earlier, these type of ITCs will be treated for this particular financial year only. I hope any queries till now you need to discuss. If any example is needed to be understood or needed to be clarified, please feel free to discuss.
I think we have a question from Chandrasekhar, wherein he's asking that if GSTR 2B data is reflected on the basis of one filed by the supplier, in that scenario, how the recipient will confirm GST payment of their invoices since the payment is done on 20th of month.
All right. So, as Chandrasekhar, you already know these days IMS facility is is being availed and given by the government authorities. If you work on the GST portals or any kind of automated softwares, so as and when the GSTR1 is filed, all those invoices, if it is not an e-invoice, I'm taking in that scenario, if it is an e-invoice, it is as an e-invoice is being submitted on the portal, the same would be reflected in your IMS on the daily basis. Like, and you, as and when you're going to accept it, the same will be posted in your 2B. If it is not an invoice, all the invoices that he has filed in GSTR1, because other scenarios would be like B2B only, so the same would be reflected once and when his one is filed. So once your GSTR one is filed, the same would be implicated in your IMS. You can get a look that what all invoices he's recording it, because segregation independently cannot be made, like whether this invoice is paid or not. Either you can pay it through cash or by adjusting it through your ITCs of the previous year balance. This would be taken as a kind of adjustment or a payment only. So as and when it is reflected in your IMS, you accept it and you take it in your 2B. That means you are admitting that he has paid the taxes, as in if it is reflected in your through one. Because just a note here also, that in some cases what happens, sometimes at the time of filing also he removes those invoices automatically. If you have taken the accept action in your IMS and it has been moved to your DST or 2B, the same would be removed from your IMS also and will not be reflected in your 2B. So this way you can easily trace that whether he has made the payment or either through cash or through adjustments of ITCs.
I can see that Bilal and Anirudh have a few questions, but they are unable to speak. I would request you to please share your questions on the chat. Bilal was asking us that if you can please repeat table 7 again.
So, Bilal, on your request, I'll just quickly take table 7 because we are already ahead of time. I need to close it. So, like table 7, basically, if you could see, these talks about the reversals and the ineligible ITCs. Rule 37, 37A, I've already explained. If the payment is not made in 180 days or your supplier has not made the taxes, it is for that. 38, 39 would be for the NBFCs and banks because they have some conditions to take the ITCs of 50% and rest would be treated as block. 42 and 43 talks about the ITC reversals in cases of the inputs, like if you have any taxable and the exempted supplies, and if you are using any goods or services commonly for those in all the cases. So you need to reverse the part of the exempted category, and you're not eligible to take that. So that is the part. 43 is basically your capital goods if it is being commonly used for the supply of the eligible for the taxable and the exempted supplies. The similarly you need to take this out. The calculations needed to be made for a 5 years basis, and accordingly for every year you need to reverse that amount. 17.5 is talks about the block credits that have already been identified by the government, where you are uh, strictly shows that what all kind of the categories of the inputs that are specifically mentioned by the government which you are not entitled to take credit of. It is the personal expenses, it is the like if you have goods lost, stolen, or through the theft, any such cases, all these are under the block categories. Tran 1, Tran 2 credits belongs to the basically the previous year, like at the time of transitions that were happening from the VAT or excise into GST. These are those time credits. H1, if you could see, these are the reversals. If any reversals is not accounted for in any of the above reversals, you'll need to include here. And similarly, total ITC reverse is the totals and the net ITC. I think this much is pretty much, much explainable to you in detail. So I think if in still case you have any doubt, we can take this at the end.
Also, Kanika, just one more thing by Bilal himself, that they did some kind of sales that were paid by cash, and there was no ITC that was allowed, like on transport sale, it's not allowed. But ITC was claimed by them, wherein no cash was paid in 3B. Now they are asking that how to do the reporting of the same and the payment.
I just need to go through that a case again. It is like you have some sales in cash, right?
They have done the sales in cash, but the problem was the ITC was not allowed, but they did claim the ITC on the same, and the same was paid in whatever was paid. It was shown in 3B. Now they want to know how to do the reporting on the same.
So basically, they have taken the input. Now they want to reverse it, and assuming this ITC is ineligible on the account of 17.5 section, and that is a permanent kind of reversal. So the same would be reflected now. You can even now record it, assuming if it is been of previous year also or for this year also, you can reverse in table 4B. In table 4B in the permanent 4B1 in the permanent reversal section, and you can maintain a log with your, because you need to create some reference for your own self because you are reversing in the if in the different financial year you have some explanation towards it. Otherwise it's not a problem at all.
Sindhura is asking us that the temporary reversals were done in 4B2 of GSTR 3B. If we
Just to add one more point, that if you are doing that reversals after a certain time period, some interest implications would be there because you have claimed unauthorized ITC for that duration of time. So with interest, you need to reverse that thing.
Sure. Sure. Hopefully, Bilal, that answers your question. Moving on to Sindhura, she's asking that there were temporary reversals that were done in 4B2
All
of
right.
GSTR 3B. And if they show it in table 7H, then table 8B doesn't reflect the actual claim of that particular FY. So she wants the clarification on the same.
You have reported in 4B2 of the temporary reversals, right?
Yes.
And now you are saying that the same is not reflected in table 8B.
That's not being reflected in table 8B, the actual claim of that particular FY, while it's showing in 7H.
The reversals is not being, but table 8 basically shows you the ITCs that are there in GSTR 2B. So, and you are talking about one reversals in table H1, right? And you, if you have already, I think, uploaded it, you're in 4B2, it's a temporary reversal. So, I think it would be taken care of after that once you have filed the 3B. Because 2B would be the case that what all ITC belongs to that particular financial year. From that, you need to decide on the basis of the reversal that where you need to take it. So I think it's pretty clear, like it's a kind of, you can do it in H1, but it will not be reflected in 8B. And similarly, we're going to take this in table 8B also.
Mangesh, your question, we'll take it up in a while. Let's continue with the session so that we do not cut the flow in the middle, right? Please keep some patience. We'll take all the questions. Thank you.
So here till now, we have discussed all the scenarios that could have implicate your table 6, 7, and 8 with all types of situations, right? So now coming on to the table 8, as you can see, table 8A reflects your GSTR 2B ITC. What all ITC has been reflected in your 2B. Now here is a catch, like table 8A. So basically, table 8A here I just need to denote because here there's a change in 8B which has an implication over that also. So this 2B will not only include the ITCs that are appearing in 2B for this financial year, but this will also have an inclusion of the inward supplies that belong to financial year 24-25 and you have claimed in subsequent financial year, that is 25-26 up to 30th November. So it will be including that, but it will not be including of any ITC of 23-24 that is appearing in the 2B of 24-25 from April to October. So it will not be reflecting that. So here you can get a understanding that it implicates only for 24 and 25. Now government has removed from 8B. Earlier it was ITC as per some total of 6B and 6H, right? 6H was the reclaim amount that you will going to reflect it. Now government has removed that because this 6H amount, reclaim amount, used to create confusions and unnecessary differences in table number D. So what government is doing, it is going to take the ITC for that particular financial year. 6B basically talks about the ITC's particular of the segregations that you have taken in this financial year of 24-25. 6C basically talks 8C basically talks about the ITCs that you are taking in 25-26. So now I think this difference would be shut down. Now this difference would be I think nullified, and all your balances of what is reflecting in 2B would be easily segregated with showing a nil difference here. So I think government has actually relaxed you with this thing because unnecessary additions of values in table 8 creates chaos. So it is doing in that way. And another insertions had been made through H1, table G, H, and I. G, H, and H1. What it talks about? It talks about the import of goods, right? Now, what earlier it was like you need, if you have any imported any goods and you have paid any IGST, and it reflected only any ITC that you have availed. So there always been a difference of the ITC on imports not availed in this particular financial year. So government has given understanding for that also, that bifurcation, so that there no such difference should again arise in this table 8, and you can easily account for what you're going to move forward in the next year financial years tables or calculations. So here IGST paid on imports of goods will be included, all the amount. Whatever you have credits you have availed on the import of goods in this financial year, that is 24-25, will be included here. And in H1, whatever you are moving forward to the next subsequent financial year, you will going to include that. So now the difference of G, H, and H1 will be nullified here also. So this is all about the table 8. And now we can move further with the related examples. So here we have taken few examples for an understanding where suppliers have reverted late invoices or have claimed their ITCs in the next financial years. So the scenario is that you have purchased some articles or goods in January 2025, but the suppliers have already told you have not uploaded the invoice in GSTR1. Earlier, the scenario was that I've already spoken about, that the ITC you have not at all claimed in 24-25 and you're subsequently moving it to the eligible period up to November. in 25-26. Another scenario will be hitting like if any sales invoice has not been uploaded in the current financial year, the same has been reported in the next financial year 25-26, and it will be reflected in that GSTR 2B. So table 8, how the it will going to implicate table 8. Table 8A will be like from the 2B, it will not be reflected there. Of 24-25, you need to mention in 8C that of this financial year claimed in next financial year. And similarly, you will also going to mention in table 13 because it implicates all those ITCs that belongs to this current financial year, and you will going to have it in the next financial year. This is like basically table 8C. This is a major clarity that whatever ITCs have been missed, these all the ITCs would be taken here, and not the reclaimed cases of 37-37A would be included here. So table 8C and ITC of this financial year that is claimed in next financial year, similarly in table 30. Now the another important change is of the table 9. I think many people have an idea about like the negative liability ledgers. Earlier, negative figures could not be filled in the GSTR 3B. So in cases where any months in any months you have no such inputs and you have just a credit note. So now you can maintain that negative liability ledger also, and accordingly you can claim it in the upcoming and the forthcoming months with that. But here table 9 earlier used to have the tax payable amount is the net one. Whatever you have made payable in your returns will be reflected here. Now what change government has taken, that whatever payable was there and whatever adjustments have been made from that negative liability ledgers that have been accumulated so far, it will be reflected in the ICS column, that is integrated central and state taxes, whatever payable. Another thing I need to mention here, because which I missed in the preceding conversation, I just need to mention that GST 9 conceptually has been introduced by for a reason. What is the reason behind that? You have filed returns 1 3B for the whole financial year. There may be cases you have missed some outward supplies for which tax needs to be payable, or some ITCs needed to be claimed, which has been given only up to the permitted period by the government. What all changes, all the outward supplies that have been missed and needed to be paid, these can be reflected. So tax payable column is editable column. You can amend this, you can file it. Now the another way to make the payment, you cannot go back to the returns and make the payment. So what is the how you can make the payment now? It is through DRC 03. It is being an instrument that is being used for payments for all the lapsed taxes that you have missed to pay any taxes and you wanted to be adhere towards the government. And only but one catch is that as you have restricted your payment, so you need to pay some amount of interest also to the government. So with DRC 03 you can make the payment here, and it will, and tax payable could be amended here. And then you can bifurcate that what all ITCs you have been used for making the payment of the taxes. I think Bilal, your concept will be cleared here also, as we were discussing earlier, and balance of it has been paid through cash. If in case there's still any differences in tax payable and tax paid, will be reflected here. Another point I need to grab here your attention is like if any negative liability ledger is negative, like it is an excess, then it will not be reflected here. Suppose you have liability of 1000 rupees and your negative amount is 1100 rupees. So that negative 100 will not be reflected here. Only the positive outcomes, even after adjustment of that negative liability ledgers, will be reflected here. So this was all about the table 9. If anybody has any question till now, please let me know. Now moving on to the table 10, 11, 12, 13. I think earlier somebody was asking to have a walkthrough of this also. So basically table 10, 11, 12, 13 talks about the transactions, missed transactions basically, not the reclaim ones. Please be clear on that. All the missed transactions that you needed to include in 24-25 but you have missed by any chance, and now you're taking in 25-26 up to the specified period. Here, I just needed to add an irony of the government also. What in table and 10 and 11, there is no limit to, to you update your outward supplies. It might be of this but preceding financial year, that is 23-24, or any further previous preceding financial years, like before that also. Though there is a limitation of claiming the ITC for up to next financial year 30th November only. But here you can report any outward supplies that you have missed in table 10 and 11. Table 10, in this, if you have any upward, you need to increase any liability you in 25-26. Now you have gone come across to that, you can mention here. And if in case you have any downward changes, like there is reduction in any outward supplies, you can mention through table 11. Table 12 and 13, here there is only a little bit language change, just to have a better understanding and clarification, that any ITC that has been reversed in the next financial year, like 24-25, you are reversing in 25-26, right? And it will be declared here. And any ITC you are like table 8C, any ITC that you are availing in next financial year will be reflected in table 13. So basically this is a whole scenario that need to update in table 10, 11, 12 and 13, talking about all these changes. I think this would make clear all your doubts. So moving ahead, focus areas, I think the eligibilities, the post supply discounts, because they need to meet some some criterias and some conditions that you need to take that ITC. The RCM issues that we've already discussed previously, the advances where ITC has been paid on the advances but has not been adjusted. So all these, I think, the gray zones that you need to take a note of, that how you can deal with them. So moving on to the next sections, because we have discussed in detail so far, where I might be some people might be having the confusions that how we need to like what should be the the steps that we need to take that to have a hassle-free filing, because though some complications are there, that you have already treated with all these information that I provided to you with an easy understanding that how you can take this forward in GST R-9 filing till 31st December. So here I'll give you a small understanding, and you can note it down also with you, that if somebody is eager to file GST 9 for their organizations, first of all, when you will going to condition is you all your previous 1 and 3B should have been filed for this financial year. All right, then only this facility to file your GST 9 would be enabled on your portal. So once you have filed all those returns and this is enabled, and you have logged on to the GST 9 filing, there may be a page of this where you have find few PDFs that has already been generated and given by you, the government. So first of all, you need to download all these statements, the GST R-9, 1, 3B, 8A details, table 12. Here is the catch. Government has also now given the HSN wise table. This would be including the all the HSN summaries that you have uploaded in all your GSTR ones. Here you need to amend it if in case you are uploading or updating any other extra outward supplies that you have missed in any this preceding financial year or any previous years. Then that should be included, and then you need to update it again in your portal in on GSTR 9. And I think you might be aware that for this basically the HSN, the codes ones, like if you have a turnover of up to 5 CRs, right, B2B, then 4-digit HSNs is fine. And if you have above 5 CRs, then 6 or 8 should be the case. You should mention that much HSNs, that then that many HSNs. So here again, coming back to this, you download all those PDFs and you have an understanding. You prepare the reconciliations. Uh, you prepare the reconciliations. These reconciliations are here. I'll just add on one thing, that we have our GSTrobo software, where if you have updated all your records of sales and purchases, and all and we can also fetch all the details from the file GSTR 1's 3B and everything. So here you get automatic all these reconciliations done. If in case you're not using any software, our software or any other software, these are the reconciliations that you should keep in mind. It is like 1 versus 3B, 2B versus PR, 1 versus sales register, 8A versus PR, HSN summaries from the sales registers and purchase registers. Though the inwards HSN is not mandated by the government till now, but the is but the outward ones HSN summary is has been a mandate. You need to file it. And another segregation of the purchases, as we have talk about the 6B, these segregations of the purchases into the input services and capital goods, whether they are eligible or not, whether any reverse charge implications. So this could be easily done if you using any software like ours, or our software only. So we can give you a check over there only, where you can segregate these transactions automatically, and these reports are prepared in just one click go. So, and also the rate wise that you're using in 9C, where you need to upload the details of the outward summary, outward supplies through the rate wise transactions, HSN wise in the your GST R-9, and this rate wise in your GST R-9C. So all these things, after grabbing all these things, you are good to go. You prepare all those things, you have the things in your hands, and with this day set of data, you can file, or you can even correct your figures, because as and when you will going to reconcile, you will going to identify those figures or those amounts which you need to incorporate, and which you have by mistakenly you have not taken in the previous years, in the 24-25 or previous years, and now you need to incorporate. So you can you can paid it through DRC 03, as I've already mentioned, all the reversals, all the miss ITCs, all the tax turnovers, whatever you need to update, you can update it here. And then you can put it in your GST R-9 utilities, and you are free, you are, I think, good to go you for filing of your GST R-9. So, I think this was the whole kind of a brief of GSTR 9, explaining you in detail what all confusions, what all issues you might erupt at the end. So this was the case, and I think now we are good to go to take few questions and end the session then.
So now we'll open the floor for you to ask any questions with respect to annual return filing, and we'd be happy to assist you. Okay, so we have a question from Sarla. She's saying that we are using your software GSTrobo from May 24 till now date. We required breakup for GST R-9 breakup bill wise. Please send. We have to file the return, and our auditor is asking us for the breakup from software itself. The name is Miltech Machinery Private Limited, along with the.
All right, Sarla, not an issue at all. We are happy to help. You just drop down an email to the customer support section of ours, and somebody would definitely reach you out, and I think would would adhere all your grievances, and things would be provided to you. Not an issue.
Any other questions?
I think Anirudh is raising his hand.
Okay, Anirudh, if you're speaking, then we cannot hear your voice. In case you're not audible to us, then please do type in your question in the webinar chat. Mangesh, so yeah, we're really sorry we couldn't take it at that time, your question. So Mangesh is saying that table 7J do not consider table 6A ITC, but in table 12 of 9C, we need to report for the financial year 23-24, the ITC of that particular financial year, which shall pop up difference. What to do?
All right. So first, your question is, can just come up to table 7?
Yeah, sure.
So what exactly your question is, Mangesh? If you can please speak. Here's this question. Table 7J does not consider table 6A1 ITC, but in table 12 of 9C, we
Mangesh, I've sent you the request to for unmute.
it shall pop up option what to do.
Are you speaking up?
Yeah, I am audible.
Yeah,
Yes, you
Mangesh,
are.
please.
See, whatever the 7J is coming, that net ITC available for distribution, okay,
Correct.
that ITC is that amount they are not considering the 6A1 ITC, okay, but
All
table
right.
12 B, I think we have to report the last financial year ITC. So exactly that difference is popping up there.
12B you're talking about,
Yeah,
right?
12B, yeah, correct. So maybe we have to make some remark there, or what 9C they are going to change, because they have changed 9, not 9C.
So 6A1 is basically your ITC
previous
of the
financial
other than reclaim, right? That you
year.
have missed of any previous financial year, then you're claiming it till 30th
Yeah,
October, right? Or
correct.
November. So the same is you're saying that all the reversals, table 12 of 9C you're talking, right?
Yeah, yeah. See, suppose we now what we'll do
Sorry.
when 9C you have to put the ITC as per GSTR 9. You have to put up there. Okay,
True.
and if
Right.
that is not matched, then it will create a JSON error. Okay, but
True.
suppose we put the ITC of GSTR 9 7 table 7J, it will not
Hmm.
consider the ITC of table 6A1. So there will be difference in there was in table 20 or maybe that difference whatever the table last table difference against books versus GSTR 9.
But I guess, Mangesh, here it is like if in table 9 you're taking all that ITCs, right?
Yeah,
And in 7 you are saying that it is not considering that reversals. All right.
not reversal table 6A ITC 6A1 ITC previous year ITC.
All right.
Okay, suppose my ITC is 100. Okay,
Hmm.
and my previous ITC is rupees 20. Okay,
Hmm.
but table 7J, okay, table
Hmm.
7J is considering only 80 rupees. That is 20, it is not considering. But in
Hmm.
financial accounts, there may be possibility that I have booked the financial year 23-24 ITC in 24-25. So I need
True.
to report in table 12A. Okay.
Hmm.
And last year ITC I have to put up there in table 12B. Whatever
Okay.
ITC claimed, then I have to put the GSTR 9 ITC. That is from table 7J. So it will create a difference. And I checked it, that difference is exactly of table 6A1.
That is there in GST R-9, right?
Yeah, yeah. But whether we should keep that difference and put a remark or they are going to change that 9C also, utility.
I think that would be a better because I think government would be addressing all these kind of changes because might be they have not incorporated that and that need to be
You
highlighted. And
understood now
if
my
in,
problem, you understood, na?
yeah, I've understood.
Yeah, yeah, yeah. Okay, okay.
So I think in the current scenario also because the time is also less because
Mhm.
might government not understand and you're correct on your part that it should have been reflected but it is not reflecting.
Yeah,
So I think the safest way that like you can reflect that amount in the in those reasons and you can
yeah,
mention it that this is the amount that have been implicated from there.
yeah, yeah, correct.
So your books would be also being
Yeah,
clean
yeah,
and
correct.
your I think the return would be I think speaking enough of your difference.
Yeah, yeah, correct. Because what we observed now,
Yeah.
they are issuing the show cause notices. They need some the point of differences only, and they are not bothered about what remark we put. They are only just going to and taking there is a difference, issue a show cause.
Yeah, true, Mangesh. I think this has been a scenario since so many, I think two,
Correct,
3 years back to
correct,
back that we are receiving these
correct,
notices. They're
correct.
not just listening, they're just sending
Yeah,
the
yeah.
show cause
They are not seeing
notices.
the remarks also.
Yeah, yeah, I agree. I agree
Correct.
to
Okay.
your
Okay, then
problem.
better to
But the
put a
thing is,
remark.
I think this is only the way that we
Yeah,
can
yeah,
deal it out, and definitely we're going to consider this
yeah, yeah,
whenever we have a meeting of the GSPs, right?
yeah,
We
yeah,
can
sure.
raise this question to them that people are facing, taxpayers are facing such difficulties while
Yeah, yeah.
filing.
We are using your purchase reconciliation, and I think Rashmi is our coordinator.
Yeah, yeah, yeah. She's from the support team. Yeah.
Yeah, yeah. Thank you.
Thank you, Mangesh. Thanks for joining. Anybody else with any question?
Yeah, ma'am, actually, we received a material through bill of entry in financial year 24-25.
Okay.
But due to some issues, we had requested to custom officer to amendment bill of entry for
Hmm.
change of the company name. And when it has implemented, then we are unable to get IGST amount till 28 November 2025. And after logging the complaint to the GST
Hmm.
portal, still it is not showing in the GSTR portal. So in that case, what we will do? So, can we claim IGST without producing of the GSTR 2B, or we are not able to take IGST because it's a bill of entry imported goods?
Uh, uh, Mangesh, sorry, Anirudh, what you can do is you can claim and reverse the
No,
ITC.
no, no. We have not claimed the IGST because still it is not appearing in GSTR 2B. GSTR 2B.
Okay, fine. I think you should claim ITC on the basis of your bill of entry. All right. And the thing is, because you have already made the payment, you have done
Yes,
all your parts. So you are an
yes.
eligible, I think you have the eligible backgrounds that you need to claim it. And
Hmm.
as it is a case of an RCM, so I think you need not to wait for that also from the suppliers and also because you are the only person that who needs to make the payment first and then you take the ITC. And in case if it is not been shown, because this is a market practice these days, because delays have been faced from the IceGate portal also. So I think that would not be a channel. If in case any question arises, you have the, I think, satisfactory documents that you have already raised your grievances over the portals, but this has not been, heard till now, and no resolutions have been provided. So you can claim the ITC. That's not a problem.
Latter, suppose government will ask us that no, it will come under section 16(4). So you need to reverse the IGST and you need to pay interest along
16(4).
with penalty.
No, I don't think so, because RCM cases, because it will be
No, it's
falling in
not
the case
RCM
of
case,
ours
madam. It's a
import, na.
yes, yes,
So it's an inward supplies, correct?
right.
So it falls under the RCM category only. You are liable to pay, because you are an importer. You are liable to pay, make that payment, correct? So
Yes,
in that,
we have
yeah,
already been paid custom duty along with the IGST amount to the custom department.
agreed. I think that would not be a challenge, because this has been an hindrance for many other people in the players in the market also, because this has been a situation that has not been dealt with the ice gate on prompt basis.
Okay, so that we can claim IGST amount.
Yes, true.
Okay, okay.
It seems that we are done with the question and answers from the attendees today. So with that, I think that we'll conclude the session for the day. First of all, thank you so much, Kanika, for this wonderful, insightful session that we had. And I would really like to thank all our attendees today for joining us and for staying through this deep dive into the FY 24-25 annual return filing changes that we have taken up. As we've seen, this year's annual return cycle is fundamentally different with more granular reporting, tighter validations, new ITC disclosures, and there's been a real-time data checks that leave hardly any scope for errors, right? So GST authorities are also issuing tons and thousands of audit notices and show cause letters, and most of them are being triggered because of the data mismatches that are happening. And the goal of today's session was majorly to help you understand how you can prepare the GST R-9 filing this time and probably not face any challenges while doing your reconciliations with 1, 3B, 2B books of accounts and other different plethora of data that we have to deal with at this time. But we really hope today's session has brought you some clarity, some practical steps, and also a framework that you can approach with while filing. For any further questions or if you need any help from our team here at GSTrobo, it would be our it will we'll be we'll really like you to send us an email at on marketing at binarysemantics.com. Post this session, we'll also be sending you a mail wherein you'll get the copy of the presentation today, because in the chat we found a lot of people asking for it. We'll be sending you that for so you can go through at your own pace. Along with that, we'll also be sending you across a GSTR 9 checklist that comprehensively covers a lot of the technical points that you might be interested in. So with that, today we'll wind up this session, and for participating today and taking your time out. Thank you so much. Wishing you a smooth, error-free, and a notice-free filing session this time. Thank you.
Thank you, everyone.